Hey folks, David Frost, mystrategicforecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is Thursday, June 12th, 2014, and you had a down day. And that wasn't according to plan. I was kind of hoping for a flat to up day, as you know, so that it would have set up for the down day tomorrow. Now, we may still have the down day tomorrow. We may have some follow-through, but what happens is this is called planning a trade. So I was planning a trade since Monday, having Friday be the down day. And I thought we would chop around all week, and we kind of started to do that. And then we had a reasonably large down day today on decent volume, not great, but decent, 106 million shares on the SPY. And so the trade is off because anything goes. Maybe we have a down day tomorrow. Maybe we have a bounce back tomorrow. So the plan that I was going to take a short position going into tomorrow, meaning Thursday afternoon, late in the day, take the position for Friday morning, that trade is off because my plan didn't work out, and that's trading. And there's always a trade around the corner. Maybe there's a trade tomorrow, maybe there's not, but when the plan goes awry, we don't force the trade. So that's kind of rule number 1-1. We never force a trade, so we're not going to force the trade. But nevertheless, we had a healthy down day, and the SPY was down 138, which is, well, in percentage terms, I don't know what that is. I can't see it on my screen, so whatever it is, it's about 1%, and that was decent volume, decent follow-through, and I would say that if you're going to have a down day tomorrow, downside target, max target would be probably around 190, 180. That's my number, give or take, and that's on a large down day. Do I think that's going to happen? And now I have no idea because we had the down day today. But if we do, I think the 20-period moving average would lend some support. Let's just take a look at an intraday chart today and see what happened. Basically, we went straight down at the open and never looked back. Market kind of went sideways to choppy. It was down. It was back up. We took another run one more time about midday, and then off the cliff we went, and that was all she wrote. So if we look at the hourly chart, what we see here is a lot of support right in here, and this is a good reason why we kind of stalled out right here. If you look, this pivot low, okay, from when was this? On the 5th of June, this pivot low was 193.11. The pivot low today, 193.11. That's no accident, folks. That's why the market stalled there. Look at all this support, okay? You had an up move, you had bullish sideways consolidation, okay? And you took a blast off from this pivot low. And where did we come into? This pivot low right here. So there's no coincidences, folks. There's reasons for things, and this is that was a good stopping point for today. Pardon me. Next stopping point on a larger level could be down here, although that's a big swoon. I don't think that happens tomorrow. Here's a lot of support, 192.5 up to that's about it, 192.26. So that all makes sense. So that's my take on the SPY. Let's move over to the interest rate market and see what happened, because we had an interest rate reversal today. And basically, this is the 10-year yield. And this is the hourly chart. So let's go back to the daily chart. And basically, you had a down day in rates. And if you remember from yesterday, what I said yesterday was that usually the rates will precede the market. So you would see a downward pressure in interest rates, treasury rates, and then the market would follow. Well, today, it went in concert. So the market went down and rates went down, and the concept is money flows into safe assets, into treasury bonds, pushing the price of treasury bonds higher, rates lower as the market moves down. So that's kind of what you saw today. I'm still in the TBT trade. I didn't foresee the sell-off today, obviously, or else I would have been out. So I'm hanging on to TBT because I think that we've seen a low for a while, and I still think we have several weeks left, and I think interest rates can float higher during that period. So that's the way I'm going to play that. That's what my trade pattern tells me to do currently. If things change, I'll let you know. If the facts change, the trade will change. But right now, it stays the same. So let's move on to gold. And gold had a nice update today. And it looks like we're taking a run at what I said yesterday would be a good target, 123. And that doesn't seem like it's too far away. It's 50 cents away in the GLD. So I think that's in the cards. And on an upside target, maybe it's this gap fill here at 124.5, call it 124.5 to 125 would be a good target. That's if this doesn't hold here, if we continue higher, if this doesn't provide the level of resistance that it might, we'll go up to that 124.5, 125 area. No long play on gold, no short play on gold. Right now, gold is a leave it alone. The reason why gold is a leave it alone is because I don't think there's much upside left, and I think there's a better low that we'll see in a few weeks, maybe a month or so, similar to this low, but maybe a better low for a longer-term low. So that's what we're looking for. I'll keep you in the loop. I'll keep you updated. My members will get an alert when I feel the time is right with the timing and the correct chart pattern. That's what we look for. Let's go over to oil. And lo and behold, here we go. A little bit of a spike in oil. The price of crude was up a couple of bucks today, and the USO was up 83 cents, and that's a nice move. And I've been saying I'm going to go, like I always do, over to the weekly chart, and it sounds like a broken record, but I've been saying that we're going to take a run at this high, okay, 39.5, maybe 40. If you go over to the monthly chart, let's take a look at what we have. And, this pivot high here, this high around here is going to be a ton of resistance. This is, call it around 40, 35.5 to 40. Where are we now? 39.5 to 40. We're 39.31. Guess what, folks? All the headlines today, I mean, dozens and dozens and dozens of headlines were Iraq, Iraq, Iraq. That's the reason oil is up. The reason oil is up is because oil was on the rise and the buyers piled on and drove the contract price up, okay? I'm telling you the pattern was setting up for higher prices for days, if not weeks already. And now all of a sudden it's Iraq. Nothing's changed in Iraq. These battles have been going on in Iraq since we left Iraq, even before we left Iraq. So that's not the reason oil was, but that's the excuse oil was up today. Oil was up because the chart was bullish, like I've been telling you. And you're probably going to see resistance at 39.5 or 40, like I'm telling you, and we'll see what happens. And then all of a sudden, if that does happen, then Iraq isn't such a problem anymore, right? Well, we'll see what happens. I understand that's a tough concept to grasp for some of you who aren't hearing this, over and over again and haven't been exposed to that way of thinking. But you have to get used to me talking like that, where, my concept is almost everything that we look at is like backwards in some respects. Like, the price of oil went up because of Iraq, but Iraq didn't just happen today. Why would it be just today? And it was a bullish chart for days and weeks. So why isn't that the reason? Anyway, so we'll continue on that topic in bits and pieces as time goes on. What else do we want to look at here? We want to look at, I think we looked at everything I want to look at. Yeah, we could look at the VIX. That would be the last item. VIX had a pop today, and I was telling you the other day when the VIX was 1099. Okay, I was saying that when it's 1099, you start to pick up pieces of the VIX, and this is the reason why. Because if you did, you're up $2.50 in the price of the VIX this week. So I think the VIX probably has higher to go. If the market sells off tomorrow, maybe it bleeds into Monday. Next week is options expiration week, so what you'll see is a lot of nonsense going on, a lot of whipsaw action in the markets for no reason at all. And then if you look at where the heaviest volume of contracts, for example, in the SPDR, the SPY, if you look at where the heaviest volume of open interest contracts are, you'll find that the price is probably headed there next week at some point in time, if not ending there. So that tends to happen. There's a lot of shenanigans that go on during options expiration. So I wouldn't necessarily take a position now in the VIX, but if you bought some options, for example, like I mentioned at 1099 earlier in the week, those I would hold, because even on a pullback, we won't go much lower than that. And if you bought longer term, that's fine. No problem there. So we're going to leave it there tonight with some common sense technical analysis. I'm David Frost. Thanks for tuning in, folks.